Hey guys, I'm Ryan Castle, the CEO of the Cape Cod and Island Association of Realtors. We're here with Ryan O'Connell at Rogers and Gray Insurance. Won our recent Affiliate of the Year winner for the association for all the effort and help they're giving our members out there, and the effort they're providing the association, providing us great insurance knowledge and insight for homeowners, for flood, for wind and hail, for just about everything that goes into that home buying and selling process of insurance. So Ryan, thank you for joining me today.
Yeah, thank you for having me.
Wanted to go over some of the highlights of what's happening in the insurance industry right now. There's a lot of changes going on, especially on Cape Cod, Martha's Vineyard, Nantucket, related to homeowners and flood and everything else. And wanted to highlight some of those, get your insight on where it's going, provide some good insight out there. But first, tell us a little about what Rogers and Gray is and what they do.
Yeah, I mean, we're a full service insurance agency. We offer business insurance, personal insurance, employee benefits. We've got 9, soon to be 10 locations. We're opening up another office in Quincy, and that's going to be finalized in the next few weeks.
And just recently you moved out to Nantucket a lot,
correct.
Right?
We bought an agency in Nantucket in July of 2016, and that's now done the full 2-year cycle. It's now adopted into all the Rogers and Gray book of business that we currently have.
But started on Cape Cod. And
Yep. I mean, Rogers and Gray started in 1906. Then it perpetuated over time, and the current owners, their family, Chuck Robinson was the initial owner, and now the sons are involved, and they also have 2 other partners that are also make the day-to-day decisions with them as well.
Oh, great. So offices on the Cape being in where?
Orleans, Dennis, Hyannis, Sandwich, Falmouth, Nantucket, Wareham, Norwell, Kingston, and soon to be Quincy.
All right, so pretty much anywhere
Yep.
they a realtor is or their client is,
Yep,
right?
we've got the southeastern Massachusetts triangle.
But one of the big news in insurance over the last several years now, since about 2011, 12 on Cape Cod, has been flood insurance.
Correct.
We saw big news the other day. Thanks for everyone that took our call to action, our National Realtor Association of Realtors call to action on flood insurance. We had about 15% of our members on Cape Cod, Martha's Vineyard, Nantucket take it. Right at the deadline of around July 31st, the president signed extension of the National Flood Insurance Program, which is up for reauthorization every 5 years. So you heard about it 5 years ago, and then it's been now some subsequent smaller term reauthorizations. The reason for the smaller term reauthorizations have been to try to reform the process. You may remember we had the original Bigger Waters Reform Act that may have went too far too quickly in the reform of the program to try to stabilize the program. So then there was about a year and a half, 2 years later, there was another reform to the reform. And then those have been subsequently expiring so that we continue with short-term reauthorization. From the politics side of flood insurance, we don't expect real long-term reauthorization to start happening until next year. The chairman of the House Financial Services Committee in Congress is retiring at the end of the year. He's had a lot of bills that have never been considered by the Senate. Doesn't really get along with the Senate side on a lot of things. And so from what we are hearing, that they'll take up long-term reauthorization next year because the House passed flood bill has never really got its due course in the Senate yet.
Yeah, I mean, they're also trying to work out the kinks and everything of how the National Flood Insurance Program will coordinate with private flood insurance.
Exactly, and we'll get more into that. Also, just reform of the program altogether, because I think everyone's goal is that eventually you get everyone up to full risk rate, as long as that full risk rate is actually assessed on science and not some arbitrary lines drawn on a map. We upgrade technology because, I mean, I'm sure you see it, but these floodplain maps aren't exactly drawn with the most updated technology.
No, I mean, it's just kind of the government flying a plane over, shooting LiDAR down to determine the zones. And once you actually get an on-the-ground engineer or licensed engineer, stamped engineer, in order to determine the elevation, something like that, a lot of time, well, I shouldn't say a lot, there's a good amount of time that the property can then be taken out of that bad floodplain.
And that's from an elevation certificate.
Correct.
And, you know, I think here on Cape Cod and Martha's Vineyard, Nantucket, I suggest always that if you're getting a listing and it's in the flood zone, get an elevation certificate before when you take that listing. Get that owner to go ahead and get one. I know some owners don't want to foot the cost of it, but you may get more money for that listing in the long run if you have a good elevation
Makes the property more saleable, because we all know that the engineers can be backed up in the.
And you're gonna have to get one, right?
Correct. You don't have to get one, but I mean, if you want to see what the actuarial rate would be before you decide to make a decision to buy a property, the elevation certificate is what will drive that.
Okay.
And the other.
So, are you seeing more buyers before they get insurance actually wanting one?
I am starting to see it more now because the fear is out there of the unknowns.
Of what the rate will eventually be.
In that way, they can at least determine it. And also got to consider too, if say the elevation certificate determines that the rate is higher, you actually toss that out until you get up to that higher rate. So it would just stay out at the basic policy. If it was higher based upon the elevation certificate, that higher rate would not be charged to start. You would start at the lower amount and then incrementally.
Yeah, I think people fear getting the elevation certificate because they don't want to know the worst. They don't want their rate to jump because of bad elevation certificate. But that really doesn't happen. The rate hikes are kind of set and capped in law right now.
And the other thing too that I try to tell realtors is tell the seller, it's a cost of doing business of selling your home. If you want to sell your home, make it more marketable, do some homework.
You're going to have an inspection. You might as well have an elevation certificate as well.
I mean, I've seen them cost anywhere from $800 to $1,500. It all depends on where the engineers will start their measuring points from. But I mean, the engineer has the on-the-ground determination, and they're the best to look at it.
And that's really key because it's to know your full risk, because if not, you're going to start seeing, you see like 25% increases every year until you get to that full risk rate.
Yep.
Right?
I mean, it's human nature. We try to advise everybody, say, yeah, you should do this, you should do that. They'll say, all right, well, I just want to get through the closing. I'll deal with it 6 months when I'm settled in or whatever. But a lot of times people will forget about that. Then they get that bill next year and it keeps on going up and up and up, and they should know where that ceiling is going to be.
But a change in the last couple of years now is, has it been to the point where an FIP can be escrowed now?
Correct.
Okay, so that's been a big change in the last couple of years.
Yep.
Have you seen people
taking
more advantage of that now?
Yeah, as long as the bank will coincide with it. So I mean, if they have a mortgage and they do have escrow, the bank will pay it in full at the beginning of that.
Because I mean, I know that was a big issue several years ago on that front, where people were getting these bills for these higher amounts, $7,000, and not having them escrowed, and then they had to pay them.
Correct, and it's paid in full at the time of application.
If not, the bank's going to put force placed on it, which comes with a premium, right?
It comes with a premium, and it also does not protect the property owner in any way. It only protects the bank itself, the loan amount.
One of the biggest things I hear from realtors is they have clients that go to multiple different insurance companies, all through an FIP, and get different rates.
Yep.
Why and how and what? Do they just take the lowest? What is the what? Because it's all supposed to be the same, right?
Correct. I mean, in my eyes, a lot of times it's all data input. I mean, we're very fortunate at Robinson Gray to have Joe Rossi as a nationally renowned flood specialist. Myself and a few others, we've taken a lot of time to know the flood policies in and out. I mean, a lot of times an insurance agent A could look at it and forget that it had a basement when it should be a crawl space, so it could be changing rates. So I mean, it's the attention to detail where they could see the difference of rate when it's an NFIP.
But if someone put in something wrong and it was a lower rate, should you say anything?
Yeah, because come claim time, if something was brought up, they could go back and take the difference in rate.
So it is important to get it accurate, even if
Correct.
it helps you.
Yep.
Even if it hurts you to get it accurate.
Correct.
Okay. And you know, one of the big things that we talked about earlier, one of the big pushes the realtors are making nationally, and I know a lot of people are, is this issue on private flood insurance.
Yep.
Everyone wants the private flood market to be there, and they want a healthy private flood market. But there's some restrictions in place, such as if you have grandfathering or any kind of pre-firm subsidies from the standpoint of your house was built pre-firm, things of that nature, you're lose them if you go to the private marketplace.
Correct.
So when you talk to clients now, one, how is the private flood market in Massachusetts right now? Is there a lot being offered?
It's getting better. I mean, we're still working out the kinks of it all, and we're hopefully going to have a new product lined up in the next few months here.
Is Lloyd's of London Lloyd's the only product out there?
No, I mean that's what a lot of brokers are going to.
Okay.
I mean, Lexington is writing some. mostly Lloyd's. The big problem with it is it's what they call non-admitted to the state of Massachusetts. So say there was a catastrophe, something happened, and that when said company went out of business, it's not covered by the state guarantee fund, which kind of works like FDIC insurance. The guarantee fund covers up to $300,000 per risk by the state. Those companies that are non-admitted are not covered by that. So if there was a loss, company A did go out of business due to the catastrophe, it's not worth the paper it's written on.
And how do private flood insurance rate them? Because it's different than the way NFIP rates them, which is NFIP rates each individual property based on how you are on base flood elevation compared to the zone you're in and the needed zone there. Private rates it a little differently.
Yeah, private is just kind of more of a blanket of a generalization. They say, all right, flood zone A and this zip code could be X in premium, whereas the NFIP pricing is more data points and use the elevation certificate. They don't require an elevation certificate in private flood, so you may not know that you could be getting a better rate based upon elevation. So there's a lot of different rating factors of NFIP versus the private market.
Yeah. So what are you, when you're talking to clients now, what are you talking to them about private flood now?
Yeah, we're starting to promote it more as an agency because for a long time, we were trying to wait on a division of insurance to come back with an answer, because technically if there's a product that is what they call admitted, then that has to be offered, because the insured and the insurance agent sign an affidavit saying that they couldn't get coverage in the marketplace. But the good thing about the private flood policies is they're coming out with better coverage in a lot of cases than NFIP policy, so that can trump that agreement of going to the outside market or non-admitted market because of they're gaining better coverage.
So on flood, that was the last several years issue. On Cape Cod, prior to that, homeowners insurance in general was a big issue, and it created the FAIR Plan. Can you talk a little about what the FAIR Plan is, and then what how that's working?
Sure. Yeah, I mean, the FAIR Plan was started in the 60s for inner city properties that nobody wanted to write. Now it turned into, I mean, I've been at this for 16 years, we'll say 14 years ago is when the reinsurance markets changed that insure the insurance companies that insured you and I. And the FAIR Plan then became the most dominant carrier of insurance.
Coastal insurance on Cape Cod.
They were up to almost 50% of the homes written by one particular carrier.
Yeah.
And the good thing about the FAIR Plan is they've adapted to it. They offer full-blown HO3 homeowners policy, rental properties. The other good thing is they have not had a rate change technically since 2010.
They're getting one now.
Because they're changing the deductibles that they offer.
Yeah.
So that
ultimately, you feel it's going to help, right?
Yeah.
Because
right now the FAIR Plan and a lot of other carriers have what we call a wind-related deductible. So any wind-related damage, the deductible could be anywhere from 1 to 5% of the dwelling limit, not the loss itself, but the amount that the policy is insured for. So if you had a $500,000 house and you had wind damage like we had all of March, you would have had a $10,000 deductible. There are some companies out there that offer a flat deductible, say $1,000 or $2,500, but then the majority now are at what we call a hurricane deductible. So it actually has to be Category 1 or greater hurricane that hits landfall in Massachusetts.
And then Rogers Gray, you having specialized in southeastern Mass, y'all are doing something different than the FAIR Plan now.
Correct.
As another option for your clients, right? Called Monomoy.
Yep.
Can you talk
Monomoy
about that?
Insurance Group. Monomoy is developed by Rogers and Gray. We aren't the company itself. We were more instrumental in getting it established. Went to London, met with the reinsurance companies, got all the reinsurance together. Then what we had to do then was find a company for it to be on company paper. So you had to go and find an insurance company that would provide the risk, but is all 100% backed by the reinsurance companies in London. And with that, we worked with Spinnaker Insurance. So that it's Monomoy Insurance Group is a managing general agent, then Spinnaker is the actual insurance company that it's placed with. But we go by Monomoy Insurance.
Okay. And so how is that different than the FAIR Plan, and why would someone want to look at that?
Key number one difference is it's a hurricane deductible versus currently the FAIR Plan has a wind deductible. So it's better potential out-of-pocket expense. The FAIR Plan is going to...
Meaning what? Can you explain the difference between a wind deductible and a hurricane deductible, especially for this area?
So say we'll go back to March, just keep on using that as
Yeah.
an example.
The nor'easters
Yep.
rather than an actual named
Yep.
hurricane.
Wind is any wind whatsoever. So it could be 1 mile an hour or 200 miles an hour. If you have wind damage at your home, that deductible can apply. If you have a hurricane deductible, it has to have hit landfall in Massachusetts.
It had to be a named hurricane.
It has to be a hurricane by the National Hurricane Center. The other third one out there is what they call a named storm deductible. That's what the fair plan is actually switching to.
Okay.
But here we can still see a decent amount of losses from that because it could be once a named storm down south. By the time it moves its way up here, it's a tropical depression of sort, but people could still have a loss at their home because it was once a named storm that can apply. Does not take into consideration the foolish names by the Weather Channel, Nemo, whatever they come out with this winter. Whenever there's a big storm now, they come up with a name. It has to be National Hurricanes.
Okay. Because one of the issues is that you're seeing more and more damage from wind and from flooding both in winter storms than you have in the past, right?
Yep.
I mean, especially this past March, right? That's what you keep referring to. You know, I think traditionally on Cape Cod, we've always seen as hurricane season. That's to be worried from.
Yep.
But on the insurance side, it's really the winter storms that you're probably getting the more claims from now.
Yeah, that's a big one. I mean, we've seen more and more, particularly this end of this last winter. I mean, fences ripped down, trees ripped down, a lot of power outages, flooding. A lot of people, the water table is extremely high this year. A lot of people drive through some neighborhoods, you just saw water being pumped out into the street for months at this point. The big thing everybody has to consider is we're all in a flood zone. It just depends on the severity of it. So if you're in a flood zone X, which is low risk 500-year storm flood zone, compared to a flood zone AE or VE, which is 100-year at AE and VE is velocity zone, those haven't seen as many claims, but we've actually seen a lot more potential claims in the good zones because, number one, people don't have the coverage because homeowners policy does not cover it. And then people say, I'm not in a bad zone, I don't need flood insurance. Well, a flood has to affect 2 parcels or greater. Parcel A could be the roadway, parcel B could be the house. So if even road runoff running down the road comes and wipes out your part of your foundation.
And traditional homeowners doesn't cover wind either, right?
It covers wind, it just depends on what kind of deductible applies to it.
Okay.
Yeah.
So the different deductibles between the wind deductible, the named storms, and the hurricanes.
Correct, it's all
what you're
carrier
talking
specific
about.
at that point.
Okay.
And that was a big thing when we were developing the Monomoy product of getting a hurricane deductible because we get wind every day. Who knows when a hurricane will come? Named storms do trickle up.
So wind would be covered in your regular deductible.
Yep.
And it's not a separate deductible, which is why the key component of Monomoy.
So if you say $1,000 or $2,500 deductible people would choose to have, if it was a hurricane related loss, then it goes that 2% of the dwelling limit.
Okay.
And particularly with Monomoy too, what we've done.
So what do you typically see like in the fair plan on a wind deductible?
2% if it's under $600,000 in dwelling coverage, and if it's less than half a mile and it's greater than $600,000 in dwelling coverage, then it goes to 5%.
And one of the key components that a lot of people get mixed up on is on insurance. You see it on flood and you see it on homeowners too, is dwelling coverage.
Correct.
Right? Like it's not just I bought a house for $1.5 million. I need $1.5 million worth of coverage. It's actually what the house and the contents are worth, or not including the lot.
If you had a builder come back and replicate what was there is what to base
on the lot that you already have.
Correct. The land's not, you can't insure against erosion or anything like that, so the land's not necessarily going anywhere. But the replacement cost is based upon the rebuild of the structure.
Right, which is where you're seeing a lot, especially on the Cape Cod and the islands, you see a lot of that is, you know, you have a lot at $1 million and a $200,000, $300,000 structure sitting on it.
Yeah, and that's a big rub too in the loan community as well, because a lot of times they want the house, they want to insure for the loan amount. Loans don't have an insurable value. The homeowner's insurance is based upon the rebuild of the structure itself. So as long as the right documentation is provided to the banks usually don't have any issues with that.
So there are no loan products out there with, everyone's worried more about coastal erosion, about some of the climate change, the rising sea levels. With some of the, you see some of the areas of the Cape washing into the ocean, things like that. There's no real insurance to protect you on that stuff.
No, I mean, you can get your flood insurance, but then it turns into like the chicken before the egg. What happened, did a road away before the water took it, so I mean, it's kind of a big gray area on that.
Okay. So anything else that we haven't touched on that you're finding in the day-to-day stuff as often questions?
Yeah, I mean, it's talking to the right people. There's so many abilities that access people have to insurance now where they can go online and just start punching in some information. They aren't necessarily going to get the right coaching. A lot of times I try to tell people, don't base upon looking down at the bottom of the page to see what the premium is. Look at what's in between, because insurance is a what ifs. We don't know what will happen. You try to insure for those losses, but you also want to make sure that you're not left out in the cold at that point in time.
And when should a buyer go to an insurance agent to start that process? I know, like, it seems like it's most of the time an afterthought.
Yeah.
Because it's like, oh, I got to get insurance. I know I'm going to have to. The rate's going to be what the rate's going to be.
Yep.
And I remember when I closed, I think you and I, you know this as
Yep.
well. You know, like I have like 48 hours before closing. Oh shoot, I haven't gotten that insurance binder yet.
Right.
Let me go get that real
Yep.
quick. You know, so
The process is
with
not
an offer. After you have an accepted offer, how quick should you be going to the insurance?
once the home inspection is done. That's
Okay.
kind of what I try to tell people, like, because a lot of the information that the insurance agent or insurance company will be asking would come right from the home inspection report. So I try to tell people, once you get the home inspection completed, give a call, and then we can start the process from there.
But earlier you start the process if they're worried about flood.
Mm-hmm.
If they're worried about what my flood cost is going to be before I even purchase the property,
Yep.
before I even put an offer in, if I want to know what the flood cost might be, or looking at some of that, you guys can start some preliminary work
Correct.
to help the buyers on
Yeah,
that.
at least get some rough ideas and then dial it down once they complete the whole process.
Okay.
Yeah.
And one of the good things is we really upped the level of flood mapping we have in the MLS
Mhm.
for members, right? There's now a flood overlay. They click up in the upper right hand corner of the map and drop down parcel overlays,
Mhm.
but then they can also drop down plain overlays. So you actually have the outline of the parcels and then the flood mapping over top of it. And that's updated yearly from as FEMA updates them as well.
Correct.
So they can start seeing what it might be to be able to
Mhm.
to be able to know to send the buyer to you quicker.
Yeah, like, I mean, I tell, if it's in the seller's case, or even the realtor, as soon as that piece of paper is signed that you're gonna be listing or even preliminary, find out if it's in a flood zone.
Mhm.
Find out if the seller has a flood policy, because a big thing that we have to touch on is that policy can be transferred from the seller to the buyer.
Exactly.
That saves a lot of time,
Saves a lot of time,
headache.
and it was also going to save some money.
Correct, because then they can catch on to the credits or any grandfathering.
So
or
having a
anything like that.
transferable policy from a listing standpoint makes your listing more marketable.
Tremendously. Like back when the maps changed in July of 2014, people had a time period in which they could get what they called like a preferred risk extension policy. Now it's like a newly mapped policy, and those folks that got those policies could get it starting out at $500 or $700. Once that time window went away, then they went back to the full rates of the $3,000 to $5,000 to $6,000 to $7,000.
Mhm.
So those that were in a good zone prior that then got that policy, they can transfer that $700 policy onto the next buyer. And a lot of times when people call, I'll say to the consumer, ask your realtor if they've got a policy, if the seller has a policy. Do all the homework, because I don't want to give you sticker shock that can then throw the deal apart right away. Try and do the homework to make sure it all.
Yeah,
fits
so
in place.
realtor says you're taking a listing. When you sit down with the homeowner and go over all the things, one of the things you should be asking is, do you have a flood policy now?
Mhm.
Let me see your flood policy.
Yep.
Let me get a copy. Do you actually call your insurance company, see if they have an elevation certificate on file? Because a lot of times they may have one, right?
Yeah, you could have given it to them years ago and it could still be on the file.
You coof done it when you bought it and not even realized it.
Yeah, so I mean, there's a lot of homework to be done to make properties really sellable. that are
And
flood
most of the insurance companies will have that elevation certificate on file.
Only if it's a policy that they've been written where it's been done prior.
Yeah, for your current policy, if they had one.
They should have one, yes.
Okay.
As long
But
as it's
towns
rated.
may have one as well, so a lot of towns sometimes will keep them too.
They'll have more of like the plot plan,
Yeah.
but they'll at least be able to push in the right direction to find
Yeah,
an engineer.
exactly.
Yeah.
So there's a lot of resources out there to start that
Mhm.
process. So and so that's the key. On homeowners, we talked about the FAIR plan and all
Mhm.
that because it's so prevalent. Is it like flood too? depending on where you go, you may get a different price?
100%. Well, not necessarily different prices. It could be also, a lot of times people make a phone call. They'll call me and say, all right, I talked to my agent. I was told all I can get is a fair plan. Well, that's all that agent may have as an offering, because insurance agents have contracts with different carriers. So insurance agent A could have Fair Plan, Arbella, Narragansett, United Property and Casualty, the Barnstable. Agent B could only have the Fair Plan or non-admitted markets. So it's more calling around and finding out.
So it's not as set in stone kind of as flood has been, where pretty much everyone's writing to NFIP.
Correct.
And here in the Fair Plan, it's not necessarily like that. It's just the more common one.
Correct. And want to make sure that they have the right endorsements on there, because in case something does happen. A big one that people don't realize is that we've been really pushing people to carry the last few years is ordinance and law coverage.
So what's that?
So say there was a loss and you were right on the beach and you're in a flood zone, we'll use that as an example, and your house burned down. We're talking non-flood related, so the flood policy would not respond. And you then had to rebuild the FEMA specifications. The homeowner's policy only replaces the home to the way it was at the time of loss, does not take into consideration building code changes. The basic policy gives you 10% of the dwelling limit. We recommend at a minimum 25% of the dwelling limit. If it's in a flood zone, even do 50 or.
So
100.
I'm sure you're seeing that a lot now,
Yeah.
right? I mean, with how building codes are getting tighter,
Yep.
some of the energy building codes as well. I mean, that's a real problem, probably.
Yeah, say the town came and the insurance company didn't deem the house as a total loss, but the town came and said, we're condemning the rest of it, you gotta tear it down. That's also an ordinance and law coverage. And you wanna make sure you have at least 25% of the dwelling limit, and then consider 50 or even 100%, just in case something like that does happen.
Okay.
And we're seeing more and more of that. There was a big case this last spring off Cape of a town building that it was due to ordinance and law, they're about $2 million off in insurance coverage.
Oh wow.
Yeah.
All right. Well, how can anyone reach you or anyone
Yep,
at Rogers Gray for
give
anything?
one of our offices. I work primarily between our Dennis and Orleans offices, but we have, like I said, 10 offices spread out all over southeastern Massachusetts. We have our website, which is rogersgray.com. We have about 160 insurance professionals that are out there and can help out with anything anybody needs.
And if you guys go to offices all the time,
Yep.
office meetings, things like that, if they have specific places they want to have someone come in and talk about
Correct.
specific
We've been
things.
doing that all over the Cape the last few years. Of if insurance, real estate offices want, usually like during a sales meeting or something like that, come in and give everybody an update for 5-10 minutes, let them know what's going on out there, because both of our worlds depend upon each other.
Yeah, absolutely. All right. Well, thank you, Ryan, very much.
Thank you.
Have a good one.
Yep.
And Rogers Gray, Ryan O'Connell, thank you.
Yep. Thank you.
All set.